Well, I'm Don Havre with the real estate firm in the Tri-Cities, and today we're going to be talking about mortgage lending and practices, and we're fortunate enough to be talking with Kelly Persectel of Rivercrest Mortgage. How are you today, Kelly?
Fine, thank you. How about you?
Oh, I'm doing terrific. Well, you and I have had conversations in the past about how the mortgage industry is really changing, and so we thought it's important that the buyers out there have some understanding about some of the basic principles that are changing. And probably one of the questions that I frequently have addressed to me is that people say, well, why should I use a mortgage broker rather than just going to my lender downtown?
Basically, the difference between a mortgage broker and a lender or a banker type situation is that as a broker, we go out and we check several different lenders that we work with on a regular basis. And we check for program changes and best rates available to the consumer. And the market has changed so drastically, especially in the last year. Most of you probably are well aware of that. And things that are changing in our industry are the difference of mortgage insurance rates, interest rates, programs that are available. So my job as a mortgage broker is to go out and search for the best place for the loan for the consumer.
Well, Kelly, there's not a day goes by I turn the television on and I see online mortgage brokers. And they always advertise we have the best rates in the nation, what have you. So a question I have, and I'm sure many of the viewers have, is why should they not use an online person over someone like yourself?
Things are very different in our industry from area to area, especially now in this marketplace. So it's very important that you're dealing with a mortgage broker that has relationships that are already established with local companies that do title and escrow, for example. Also, appraisals have changed drastically in our industry. Some lenders will accept property waiver forms or what's called a 2075, where it's just a drive-by, and all that plays into the scenario when we go out and actually shop for a different loan. Also, things to be aware of, that you want to look for what's a true mortgage broker. So someone that maybe is not associated with, for example, a net branch situation where they then have a relationship with that net branch even though they're saying they're a mortgage broker. So someone that freely goes out and looks across the board at different lending situations.
Well, that raises an interesting question. So we have some individuals out there are actually representing banks, but they on the surface appear to be a mortgage broker searching for loans across the board. How would a consumer know whether or not a broker is doing that type of brokering?
You can ask a basic question to the lender that you're looking at and ask if they are a net branch situation or if they are associated with one particular bank over another. So in my opinion, it's best if deciding to use a broker that you use one that across the board is shopping with all the major companies. We oftentimes tell a consumer that it's very much the equivalent to a situation of, for example, a travel agent. When you go into a travel agent, they search the various airlines for the best pricing, and then that rate's wholesale to them. Oftentimes, you're getting a better scenario in using a mortgage broker because of the fact of the relationship that they have with that lender than you as a consumer going in and obtaining that loan directly.
Well, that certainly makes a lot of sense to me. One of the issues that I've seen over the years is that sometimes my clients will use an online broker through an 800 number system, and everything seems to be very smooth, but once the loan is originated, they have real difficulties getting hold of the processor. So one of the advantages I see of a local person is that you can actually come down and visit the office and talk face-to-face with the individual rather than being placed on hold on an 800 number trying to get through and determine what the status of your loan might be. One of the issues that I've talked about in previous presentations is that the majority of buyers out there seem to be concerned primarily about price. And price is an important factor, but it certainly is not the most important factor in the buying process. Kelly, could you kind of give me an overview of what you think is probably a more important factor than price by itself?
Well, I think that purchasing power is very important, and I know right now consumers are very concerned with prices of homes coming down, and at what point is it good to be purchasing. But one thing to remember is that our interest rates are at an all-time low right now. And so I did a little bit of an example and just did a 30-year mortgage at a $200,000 purchase price and said, okay, if we're at a 5% interest rate, our principal and interest would be $1,073.64, so approximately $1,075. Now, if I in turn said, what if our interest rate was at 4.5% or dropped 0.5%? What would our purchasing power be at that point? and that actually is $211,895. So approximately $12,000 difference in purchasing power for that 0.5% interest rate. And again, if it drops to 4% rate on a 30-year, you're around $224,886. So almost $25,000 difference.
So for those on budgets, and I think most of us are on budget of one type or another, that we really need to take a look at our purchasing power and price both. And purchasing power many times can be the most important factor in this process. Hey, credit score systems. We hear about credit scores and how that system seems to be changing. Kelly, could you give us an overview about what that's all about?
Definitely. That is something that has drastically changed in our industry. I know that most people are aware of the fact now that we do everything on a credit score-based situation. So it used to be in our industry that a 720 credit score across the board was, you would qualify for almost any program that's out there. Now they actually break those out and do those in grid rating systems. So you can have a program that might go up to a 760 credit score before you get the best pricing on that program. And not only is the lenders doing that, but also the mortgage insurance. So anytime you have less than on a conventional loan putting down 20%, you're going to be dealing with a second underwriting or a mortgage insurance type situation. So those also have changed across the board. Mortgage insurance rates used to be the same and standard from lender to lender. Now each lender that we deal with has a different grid associated with that. And some programs aren't even available with certain lenders. So it's very, very important for the consumer to start that process early. We encourage that. We want to help that client get in. If there is a situation with the credit, that we can bring that credit score from a 720 to a 760 and get that up to the top grade, then we look to do that. And we have some clients that they might be in with us for a year before they actually come to meet with you, Don, and go out and purchase a home.
I've always recommended that clients talk with a lender right up front, and there are a variety of reasons for that. And one is you want to get that pre-approval letter in your pocket as quickly as possible before going out shopping for loans or homes. And one of the reasons for that is you may find yourself in a multiple offer situation. Or two, in most cases, a seller is always going to ask for the pre-approval letter. And I think one of the third issues is that, as Kelly indicated, there may be some problems with the credit by the credit scoring companies making mistakes or errors in the credit reports that they're rendering. And so if you look at your credit up front through your mortgage lender, you'll be able to take care of any potential problems. And I personally, when I purchased a home here in the Tri-Cities, I had a situation that was exactly that. And it took us a couple of weeks to get that resolved, and it was a mistake that the one particular retailer made. So, well, that's it for today. We certainly want to thank you, Kelly, for sharing this information with us. And let me ask you a basic question. If someone's shopping for a loan, where do you think they might want to start?
Well, I hope that they would do all their research up front, and then hopefully will at least give us a call and talk to us about programs and rates. And we look forward to working with all of you in the future at Rivercrest Mortgage.
And how do you contact Rivercrest Mortgage?
Our telephone number is 783-1756, and we also have an email at rivercrestloans.com.
Thank you, Kelly. And that's it for today.
Thank you, Don.